Block trading is closed on April 1st, 2023. We'll do our disclaimer, go over our calls, make some predictions, and take a look at the longer term picture. Remember, my calls can be wrong. Trade at your own risk. It's my trading plan for Monday, April 3rd. Look for the pattern with the early low, which is this. Tends to be a rally day with a high in the final hour. Monday, I believe, will have the early high. We viewed Thursday's action as negative. We said if the rally was to continue, we'd have to gap over this high and ideally over all this resistance. I also said that would be hard to do, but that's exactly what we did, which is what you had to do to get the rally to continue. And here's what we said. These are the patterns I think we'll see next week. There's no trading on Friday. We crossed two MEJT targets off the list, 40.58.36, 40.62.45. If the rally continues, which certainly isn't a lock, the next higher one I have is from last month, 2 months ago, 41.48.43, but we have to add a target to the list from Thursday's trade, 40.42.27. During the day, MEJT said this drop wouldn't stick. It didn't. Said this rally wouldn't stick. It didn't, and that's already played out. Now, we had a target. We said once we traded back over the FOMC announcement price of 4,000.87, that we should trade over it by at least as much as we traded under it. That gave us a target of 4,091 and change. Well, this high right here was 4,091 and change, right on the mark. It actually fell a few pennies short, but that doesn't make any difference. Now, hitting the target isn't a stop and reverse. It just means that the pattern which propelled us higher was played out. It wasn't any longer an active pattern. And once we hit it, we just flatlined for a while, which implies that number had some validity. Then we had all these shenanigans in the last hour, which I find highly suspicious and most likely related to end of quarter trading. I'm particularly suspicious of the wall into the close. Tends to say, get me in at any price, and it certainly isn't indicative of institutional purchases. In fact, institutions need a lot of liquidity to make their trades, and if they're going to go long with abandon, they certainly aren't going to wait until the last hour starts on Friday to make their purchases. The liquidity they need is just not there. So this is the action of the amateurs. Now, they aren't going to be wrong every time, but if this is just action by the amateurs, if that's what it is, we should gap down smartly on Monday, ideally under this low and possibly under this one. It certainly isn't a lock, but it certainly is entirely possible. We're now way over the upper Bollinger Band on the daily chart. It's not a stop and reverse formation, but it certainly is indicative of the end of a leg in terms of time. You can see how infrequently we stay past the Bollingers very long. We also have the NASDAQ McClellan oscillator and the volatility index at levels which have been seen in the past at changes in trends. Let's take a look at the longer term picture. Maybe I should start with the weekly chart first. The idea is we've completed a big ABC, which has taken over 20 years to form. If wave green C, I think that wave green C has hit its low in terms of price, but not in terms of wave structure, because if that's the right interpretation, we should be railing in a 5-wave structure. And all this action is 3-wave structures. So I think we're going to have to, I think we've completed A, probably completed B, and at some point we're going to have to complete C. And very often when you have a spike bottom like that, C is going to retest the low of A, even though I think that price is going to hold. Until we start advancing in a 5-wave structure, I'm going to assume we're still in a consolidation. So here's that wave down. Let's try that again. Here's the wave down. Whether or not you want to count it or not, I mean, it's not just one way to count this, but there's still resistance at the 61.8, even though that's prior to this low. I don't think it makes a difference. It's a level I don't think we should see again if that's the right interpretation. And this level here at the 50%, that really should hold. And that's not a whole lot higher, maybe 1% higher than the high on Friday. So if that's right, you really want to see this hold within 1%. Within 1% of where we are now. Now this magenta thing is your Andrews pitchfork that shows resistance. And here's the channel we've been in. This rally has been on volume which has been declining all the way. And it's not good when you rally from the low of the channel to the high of the channel in a straight line. You really want to, you use up a lot of energy when you do this, and you really want your energy for breaking through the channel, not for just getting up to the resistance at the upper end. Doesn't guarantee you're not going to go higher. I've seen these go higher. But usually a channel sloping up at some point breaks down. Usually and always aren't the same thing, so if we continue higher, that idea is not going to work. Let's look at the wave count. Well, I have this as the end of the green C, as I said, and then I think it's just A of C. I think we'll make a B and a C with a retest of this low. And somewhere you're going to have to get this wave B to end. So let's look at some places where it could end. What you want to do is have it end at a Fibonacci retrace of the prior decline. Right now we're within a point or so of the 78.6. It comes in about 41.12 and the high was just under 41.11. That's really close enough. So you're at the 78.6 retrace, and if this is just a retrace of this drop, you really shouldn't go much higher than that. And if we do, then it's the wrong interpretation. This is that's not the one I want. Let's look at the count from this low in October. It's at least possible to count this as an A, this is a B, and this is a C. And if that's A, you have good fibs with A with C equal to A, and that's B, and again A, B, C, C is equal to A. You can see that right at this top we stopped at the 50%, so it's one of the places where this pattern can complete. Now let's look at the rally from this magenta B low. If you count from the low, you can count this as A and this is B. C has a good fib ratio to A. I mean, that's right there. And it's possible to count this as a 5-wave up pattern with a wall into the close. I mean, it's a logical place for the bears to step right back in. Doesn't mean they will. Well, Monday's pattern has the early high. We could still gap down. Friday's gap cleared strong resistance and featured increased breadth. The high of day was in the first 5-minute bar and the low in the last. Strong Friday rallies nearly always follow through at Monday's open, and April is one of the market's strongest months, especially the first half of April, until tax day. All this is bullish stuff. It's so bullish that if the signals fail, they should fail big time. Bulls need to confirm Friday's move by trading past the close by 1 cent. Action in Friday's last hour was highly suspicious. The late rally and wall until the close imply institutions were not behind the advance, makes the market vulnerable, not a guarantee, vulnerable to gapping down smartly when we reopen, regardless of what happens in overnight trading on Sunday and Monday morning. The NASDAQ McClellan Oscillator and the Volatility Index are at levels compatible to the top. There's Fibonacci and trendline resistance at the high, and volume was unimpressive on the advance. Bears have a great chance to retake control here, but we won't know until Monday if they will. So if we gap down, that's an if, we don't know yet, but if we gap down smartly, this rally leg may be over. So I'm looking forward to this because any move past resistance has to be confirmed. If you can't trade past this by 1 cent, it doesn't mean anything, and particularly if you gap down smartly, this whole thing is a false move. Now whether or not we will gap down smartly, I can't say, but certainly if we do, I can explain it based on all the factors we've discussed in this video. So it's a make or break time here for the bears. It's a pattern with the early high, but if we gap down, there's a good chance this rally leg's over. And if we gap up instead, or continue higher significantly, then we've overcome more resistance. So we'll have to see how we open Monday, but I'm suspicious of this leg rally, and that's today's call.